Hey everyone, welcome back to Tomorrow's Mind, your daily dive into the future of AI and tech. I'm Sam, and today we're tackling a super exciting topic: how to invest in AI startups. A beginner's guide to profiting from tech. Whether you're brand new to investing or just AI curious, this guide will help you understand how to jump into one of the fastest growing and potentially most profitable sectors out there. So grab your coffee, hit that like button, and let's get into it. Let's start with the why. Why are investors, from beginners to billionaires, throwing money at AI startups? AI is no longer science fiction. It's powering everything from personalized ads and autonomous cars to medical diagnostics and financial analysis. The AI industry is projected to grow over $1.5 trillion by 2030. That's massive. Startups are the innovation labs of the future. They move faster, take more risks, and if you invest early, the potential returns can be game-changing. Think of companies like OpenAI, DeepMind, or Anthropic. They started small. Today, they're revolutionizing the world. Now let's break down how you can invest. As a beginner, there are several paths. Some easy, some risky, but all with learning potential. Startup platforms. Equity crowdfunding. Sites like AngelList, Seed Invest, or Republic allow you to invest in early-stage AI startups with as little as $100. You get equity, which means you own a piece of the company. Venture capital fund syndicates. Not ready to pick startups yourself? You can join AI-focused VC funds or syndicates. These are managed by experienced investors who pool money and invest on your behalf. Public stocks with AI exposure. If you prefer the stock market, consider investing in companies that are major AI players, like NVIDIA, Alphabet, Microsoft, or Palantir. It's safer, more liquid, but with lower upside than early-stage startups. 4. AI ETFs, exchange-traded funds. These bundle multiple AI-related stocks into one investment. Examples include Global X Robotics AI ETF, BOTS, or ARC Autonomous Tech Robotics ETF. Great for beginners. Before you invest in any AI startup, do your research. Here's what to look for. 1. Founding team. Are they credible? Have they built anything before? Founders with strong AI, engineering, or business backgrounds are golden. 2. Tech edge. Is the startup offering something truly unique? Proprietary algorithms, access to unique data, or first-mover advantage can be key indicators. Market potential. Are they solving a real problem? Is the market big enough? AI startups in healthcare, finance, robotics, and cybersecurity are red hot right now. For funding stage. Early-stage investments are high risk but high reward. Later-stage startups are more stable but less lucrative in terms of ROI. 5. Traction. Are they already generating revenue or showing user growth? That's a great sign. Let's be real. Startup investing isn't a guaranteed gold mine. In fact, 90% of startups fail. Here's what you need to know. Liquidity risk. You won't be able to sell your shares anytime soon. It could take 5 to 10 years, if the company even exits. Dilution. If the startup raises more money, your ownership percentage could shrink. No dividends. Startups usually reinvest all their earnings. You make money only when there's an acquisition, IPO, or secondary sale. So invest only what you can afford to lose. Seriously, treat it like your moonshot money. Here are some quick tips to boost your success. 1. Start small. Don't throw your life savings at your first startup. Start with small amounts and learn the ropes. 2. Diversify. Spread your investments across multiple startups or sectors. Don't go all in on one shiny AI idea. 3. Follow the trends. Stay updated on AI advancements. LLMs, robotics, AGI, edge AI. Knowing what's hot can give you an edge. Network learn. Join communities like Indie Hackers, AI Twitter, X, or attend pitch events. Knowledge and connections are power. Think long-term. AI is just getting started. Don't expect overnight returns, but think 5, 10, even 20 years ahead. Let me give you a quick example. Back in 2015, an AI company called UiPath raised early funding through seed investors. Fast forward to 2021, it IPO'd with a valuation over $35 billion. Early investors saw returns of over 100x. Not every story is like that, but that's the kind of upside we're talking about when you invest smartly in AI startups. So is investing in AI startups worth it? Absolutely, if you do your research, diversify, and stay in for the long run. The world is being rewritten by artificial intelligence, and now's the time to get in on the action. If you found this helpful, don't forget to like, subscribe, and share with someone who wants to grow their wealth through tech. Until then, keep thinking forward. This is Tomorrow's Mind, and I'll see you in the future.